Hey, good morning, everybody. It's Rick Mount with the Paradigm Mortgage Group. Happy Tuesday, October 2nd. I can't believe we're already in October. And out here in California, boy, it's hot. 105 degrees yesterday in most areas. But hey, so's the rate market. It's really hot. So let me walk you through this. We've got a yin and a yang thing going on right here. So Fannie Mae, Freddie Mac issue mortgage-backed bonds. That's what sets the coupon or the interest rates that we can do that. On the back end, we have the federal government purchasing these mortgage-backed bonds instead of just relying on the private market. So it's artificially lowering interest rates. So let me walk you through this real quick. This big green bar right here, and anytime you see green on this chart, it's healthy for interest rates because of the way the mortgage-backed bonds are trading, and that helps drive interest rates lower to the consumer. So this bond, this big green bar right here, was a couple of Thursdays ago when the federal government announced their increased support for buying mortgage-backed securities in the tune of $40 billion per month. That's a big number. So you can see that next Friday we fell a little bit as people came back to the senses. Since then, we've been on a steady stair step towards better interest rates. Remember, green is good for our interest rates as far as the consumers go. A little bit of a sell-off, but then here we are today, a little bit of positive ground. So long story short, we're in uncharted territories here. We're not sure how long it's going to last because the government didn't tell us how long they're going to continue to spend this. It's an unending commitment, so enjoy it while it lasts. What does that mean for us as the mortgage industry and you as the consumer? Well, interest rates are at all-time lows. To give you an idea, FHA 30-year fixed pricing, 30-year fix is around 3.25, and in many cases we can issue lender credits towards that to help offset costs. On the conventional side, we're seeing 3.375 all the way up to 3.75 30-year fix, depending on where your FICO score is and what your down payment is. But like I said, all-time lows, and VA loans pricing near or at where the conventional loans price as well. So give you a quick idea. Let's pull up anything that we can see that might affect this week's trading. Overall, we think the trading is going to be pretty consistent, but you can kind of see as we come here Tuesday through Wednesday, we see the Federal Open Market Committee meetings. This could have a high impact if they come out and say something that the market hasn't already expected. So what we're seeing is the market is very proactive. It builds into what it thinks will happen, and then sometimes it's surprised with meetings, minutes releases, or in these cases, weekly job claims or factory order, any of these things that could come out and have an impact on the pricing. So we think for the most part they're going to trade in a pretty narrow range for a little while. We're going to enjoy these low rates, and if we can help you in any way, give us a shout. We look forward to helping you along the way. Make it a great week.